The housing market can't just keep going up forever, can it? Are we in a housing bubble that's about to crash? Are interest rates going up? Is inflation going to kill this real estate market? There are so many things to talk about when it comes to real estate, and on today's video, I'm going to answer all of those questions. I'm going to talk about what I think is going to happen in the short term as well as the long term. So if real estate is in your plans, or if you're just a fan of real estate and you want to know what's happening, this is the video for you. Don't miss it, and make sure you stay until the end, because I'm going to pull out that crystal ball and I'm going to give you my predictions as to what's going to happen in the short term as well as the long term. Let's go. Hey, what's up, you guys? I am Dima. Thanks for tuning into the channel. If you're new, please consider subscribing. Make sure you hit that like button if you like the content, and also follow me on all the social media channels and text me for all of the latest information on giveaways, exclusive content, and more. And if you're a returning subscriber, I just want to thank you and tell you how much I appreciate your support of the channel. So today we are talking about real estate, and real estate is hot, ladies and gentlemen. The market is on fire. In my 15 or 16 years of being in real estate, I've definitely seen this happen a couple of times, but it doesn't happen very often. And that has a lot of people wondering, is this a housing bubble that's gonna pop? Is this like 2008? I was there, so I'm gonna tell you what I think. And a lot of people are asking, what should I do? Should I sell? Should I buy? Should I wait? And so on today's video, I want to answer all of those questions for you. We're going to dive into the data, not the drama like we do on this channel. I'm going to show you some charts and graphs that I have pulled from my local multiple listing service. And then, of course, I'm going to give you my thoughts on what I think is going to happen. So let's go ahead and dive right in. So guys, the first question I want to answer right away is this like 2008? Is this a housing bubble that is about to pop? And my answer for you is, well, let's take a look at the data. I don't like to make predictions. I don't like to do analysis on articles that I read, on things that I hear on TV or in the news. I like to go straight to the source and look at the data and then make my conclusions based on that. So let's dive into those charts. So guys, you might have heard this in other news, but supply is at an all-time low. What we are seeing in our marketplace, and what a lot of people are seeing in many markets, is that there are just not enough houses on the market. And when you see that, and this chart really proves the point, if we take a look at 2020 versus 2021, you'll see that in 2020 in January, we had way more houses. In 2020 in February, we had way more houses. There were 43,000 houses on the market last year at this time. This year, there's only 28,000 houses on the market. You don't need to be a mathematician to see that that is a huge decline. And so what happens when there are less houses on the market, there's less supply. That means that if you keep the demand the same, and we're going to talk about demand in just a second, but if demand stays the same, simple laws of supply and demand tell us that prices have to go up because there's the same number of buyers. There's actually more buyers. I'm going to tell you why in a sec, but the same number of buyers competing for less homes. And when that happens, prices go up. The next chart I want to show you is the average days on market. This is the number of days that a property sits on the market before it sells. You know, in a healthy market, we usually see that somewhere between 30 to 60 days, somewhere in that range. Here, what we're seeing is last year, it was at 52, which was already fairly low, but that's nothing compared to where it is today. In 2021, we're seeing an average days on market of 31 days across our entire multiple listing service. Folks, that is really, really low. That means that on average, a house sells in a month when you put it on the market. I will tell you from personal experience on our real estate team that when you put a good property on the market that's presented well, priced well, all that good stuff, it's going to sell in a matter of days, usually with multiple offers. And so again, we are seeing this upward pressure on prices. The next chart I want to show you guys is my absolute favorite. It's called the month's supply of inventory chart. What this shows us is that if no new homes came on the market, how long would it take to sell out of existing inventory? You can kind of think of this as a store, and we have a certain number of properties in the store. How long would it take us to sell out? And last year, if you look at this chart, we were at about a 2-month supply of inventory. By the way, the legend on this is that anything between 3 months and 6 months is a healthy market. Anything above 6 months, you're looking at a buyer's market because there's a lot of homes on the market, not a lot of people to buy them. Anything under 3 months, you're looking at a seller's market. Well, guys, look at this. Right now, we are at 1 month's supply of inventory here in Southern California. That means that it would only take about 30 days to sell out of everything we have. That means big time seller's market. That means upward pressure on prices. So if you're a seller, you're probably watching this saying, hallelujah, my house price is going way up. And speaking of that, let's take a look at housing prices. And so as you would expect, guys, over the last year, housing prices have gone way up. Average home price last year, $822,000. This year, a whopping $1 million here in Southern California. So housing prices are really going up, and you would expect that given the charts and the graphs that I just showed you. So we've looked at supply and demand to see what housing prices are up to. Let's kind of talk about the economic factors and why this is all happening and what this means. All right, you guys, so we've taken a look at the charts and the graphs and the data, and as you've seen, we are really seeing some upward pressure on prices. Now, why is that happening? Well, one of the factors, of course, is supply, right? We've seen that there are not a lot of homes on the market. There are a lot of buyers, which we're going to talk about now, and so that's driving home prices up. So the question is, why are there a lot of buyers? What's going on? You know, we had a pandemic start last year, in case you didn't know. And so a lot of people have been out of jobs. Businesses have been struggling. Unemployment is high. There were a lot of people that couldn't pay their mortgage. So why are there so many buyers in the marketplace? Well, the answer starts with the fact that interest rates are extremely low. Let's take a quick look and I'll show you what I mean. So you guys, if you look at this historical interest rate chart, you will see this is all the way back to 1970, that interest rates have just continued to come down and are at their lowest point ever. Well, not quite. I'm going to zoom in and show you something interesting, but they're near their lowest points ever. And when people are buying a home, they're generally, when they're getting a loan, buying a monthly payment. They're not necessarily buying the gross price. I'm going to show you what I mean in just a second, but let me zoom into this chart and show you something cool. So as you can see, interest rates have been coming down. If I zoom in here, what you will see is that the lowest point came around beginning of January when the 30-year fixed mortgage was at 2.65%. Since then, though, interest rates have definitely come up a little bit. As the economy starts to recover, the Federal Reserve generally will want to raise those rates up. And so if you look, they are now at 2.97. So while you may think, hey, that's not a huge difference, I'm going to show you that every quarter point, every half point, every point of interest rate really does make a big difference. And let me show you why. So check this out. If I were buying a $1 million home and the interest rate was 2.67%, which it was about a month ago, on a 30-year fixed mortgage, my principal and interest payment would be just over $4,000. Now, as I said, you guys, when people are buying a home, what they're really looking at is the monthly mortgage. Hey, can I afford that monthly payment? The $1 million sounds great, but it's really that $4,000 a month that people evaluate when they're looking at buying that property. So watch this. Like I said, over the last month, interest rates have gone up to 2.97. So if we take that same loan, we were paying $4,040, and now we bump it up to 2.97, the payment has now gone up to $4,200. So, you know, $160, $170 there may not sound like a lot, but it does start to add up, because watch this, guys. If interest rates go up to, say, 3.5%, well, now you're paying almost $500 more. And if interest rates go up a full point from, 2.67 to, let's say, even 4%, now you're paying $4,700. So you're paying like $700, $800 more. So as you can see, as interest rates go up, housing prices should come down. So if we continue to see higher push on interest rates, we definitely might start to see the market stabilize, because people are really buying that interest rate and that monthly mortgage, not the gross price of the house. So guys, what do you think? I'm curious, based on the data that we've seen so far, what do you think? Are we in a housing bubble that's about to pop? Are the prices going to continue to go up or down in the short term or the long term? I'm going to answer that question, but I'd love to hear your thoughts in the comments below. And if you're getting tons of value from this video, or maybe you've gotten one valuable thing, make sure you hit that like button so that YouTube shows it to more people. It really does help support the channel, and I really appreciate it. And now that we've looked at all of this data, let's really analyze it and talk about what I think is going to happen. I'm going to pull out my crystal ball and I'm going to tell you my thoughts and my perspective on the market since I'm in the thick of things. And then I'm going to tell you what you should do if you're a buyer, a seller, or if real estate is just generally in your plans. So first of all, guys, based on the data that I am seeing, there continues to be very limited supply of real estate on the market. I don't see that changing anytime soon. So in the short term, as long as that supply stays really low and interest rates remain relatively low, even if they go up a little bit, I do see demand and pressure on prices continuing to increase. I will point out, because a lot of people ask me about foreclosures and forbearances and loan deferments. Although that is an issue, I will tell you that everything I am seeing is that the government wants to do everything they can to prevent those foreclosures. So they'll continue to extend these eviction moratoriums. They'll continue to extend the forbearances and the deferments so that people do not lose their homes. And so while that might be a factor longer term, I don't see that as a big factor now. So I do not personally see the housing bubble popping in this next year. I do see prices continuing to rise in markets that look like this. Now, longer term, we're not really sure. One of the big X factors is also inflation. You know, when inflation goes up, I've done a couple of videos on this, real estate is a great hedge against that. And so we see more buyers flocking into the real estate market. Additionally, you guys, the government and specifically Joe Biden want to pass a $15,000 first-time homebuyer tax credit. I talked about that on another one of my videos as well specifically. And if that happens, more buyers will come into the market wanting to buy their first home. Now, if supply stays the same, all that may do is just drive home prices up another $15,000. So we'll have to see what happens there. And so guys, ultimately the question is, what does all of this mean for you and why should you care? Well, if you're a seller or if you're a homeowner and you're considering moving, maybe upgrading into a bigger house or trading sideways or even downsizing, all of this is really good news because housing prices are up. There's a lot of demand for homes. And when a home is put on the market properly, which I'll talk about in just a second, it sells quickly and you get multiple offers. So hey, if you're a seller and you're considering moving, your house may be worth more now than it's ever been worth before. That's a great thing. The one thing I will say as a seller is that the most important thing you can focus on is working with an amazing real estate team. Obviously, I'm biased. I have a real estate team that's amazing. But the thing is, guys, that when you put a property on the market, you have to make sure, no matter what market you're in, that that property is presented well, priced well, marketed correctly so that you can maximize the sales price of the home. In any market, homes can sell up or down in price by 10% or more, depending on how those factors are handled. Let's turn over to the buy side. If you're a buyer, you might be watching this and you might be getting super discouraged. And I will say, don't. We have helped so many buyers buy properties, even if it's a multiple bidding situation, even if they're not the highest bidder. We've also found off-market properties for people. So there's no reason to be discouraged. If you want to buy a home, lock in that amazing interest rate while it's here because you'll have that for the life of the loan. It's the best way to not only create leverage, but also to create net worth for yourself in the equity in your home as it appreciates over time. Now look, guys, I can't predict what's going to happen in a 1, 2, 3 year period. But what I can tell you is when you look back historically in the real estate market over any 5, 7+ year period, we have always seen appreciation in real estate. I don't really see any reason why that won't continue in the future. And of course, though, on the buy side, just like on the sell side, it's crucial to work with an amazing real estate team to make sure that you get that house that you love and that you're not discouraged. So the bottom line, guys, here is this. I'm a big believer in the real estate market. I'm always bullish on the real estate market in the long term. In the short term, although we never know what's going to happen, the data that I'm seeing seems to indicate that this market will continue in a healthy way. We are not going to see the popping of a bubble. We're not going to see a ton of foreclosures. I don't think interest rates are going to skyrocket, although I do see them coming up a little bit. So if you've been thinking about real estate If real estate is in your plans, this is a great time to be in the real estate market, whether you're a seller moving up, trading up, maybe you're a buyer that's looking to buy your first home or a second home or a third home, or you're an investor or a flipper who wants to get into the real estate market and start making some money as a business. Whatever camp you're in, I love real estate, and I will leave you with this saying, which I have said on many of my other videos, and that is, don't wait to buy real estate and wait. One more time, I want to thank you for tuning in. I appreciate you. I appreciate your support. Make sure to subscribe to the channel, follow me on your favorite social media platform, and text me for all of the latest updates. Thanks for tuning in today, and I will see you on the next video.